Hey everyone, and welcome back to the show. Today I want to walk you through something that trips up a lot of people, especially first-time buyers here in the tri-state area. We're talking about mortgages and how they actually work. I know it sounds intimidating, but stick with me because by the end of this, you'll understand the whole process from start to finish. So let's start with the basics. A mortgage is basically a loan that you use to buy a house. The house itself serves as collateral, which means if you can't make your payments, the lender can take the house back. But here's the thing, mortgages aren't just about getting money to buy a house. They're actually pretty sophisticated financial instruments that have evolved a lot over the past decade. The first step in any mortgage process is getting pre-approved, and this is where I see a lot of people make their first mistake. They think pre-qualification and pre-approval are the same thing, but they're not. Pre-qualification is just a rough estimate based on what you tell the lender about your finances. Pre-approval is the real deal. The lender actually verifies your income, checks your credit, and gives you a letter saying they'll lend you a specific amount. When you're working with an experienced agent like myself, Brody Nash, this pre-approval process becomes your advantage right out of the gate. I can connect you with lenders who understand our local market, whether you're looking in West Virginia, Kentucky, or Ohio. These relationships matter because different lenders have different strengths, and knowing which one to approach can save you time and potentially get you better terms. Now, once you're pre-approved, you know your budget, and you can start house hunting seriously. When you find that perfect place and get your offer accepted, that's when the real mortgage magic happens. You'll submit your full application, and this is where things get detailed. We're talking tax returns, pay stubs, bank statements, the works. The lender wants to see everything to make sure you can handle the monthly payments. Here's something most people don't realize about the mortgage process these days. Technology has streamlined a lot of this documentation. Many lenders now use automated systems that can verify your income directly with your employer or pull bank statements electronically. It's faster, but it also means you need to be extra careful about accuracy because these systems catch discrepancies quickly. After your application is submitted, it goes into processing. This is where a processor, basically a paper detective, goes through everything with a fine-tooth comb. They're organizing your documents, verifying information, and preparing your file for the next step, which is underwriting. They'll also order an appraisal of the property to make sure it's worth what you're paying for it. The appraisal process is crucial, and this is another area where having an agent who knows the local market provides excellence in service. I've seen deals fall apart because buyers didn't understand how appraisals work in our area. Sometimes properties don't appraise for the full purchase price, especially in hot markets. When that happens, you need someone who knows how to navigate the situation, whether that means renegotiating the price, bringing more cash to closing, or finding comparable sales to support the value. Then comes underwriting, and honestly, this is where the mortgage process gets real. The underwriter is the person who actually decides whether you get the loan or not. They're looking at what we call the 3 C's: credit, capacity, and collateral. Your credit score and history show them how you've managed debt in the past. Your capacity is your ability to repay the loan based on your income and existing debts, and collateral is the house itself. Underwriters are using more sophisticated risk assessment tools than ever before. They're not just looking at your debt to income ratio anymore, they're analyzing spending patterns, employment stability, and even considering factors like remote work arrangements. If you've been working from home since the pandemic, that's now considered stable employment, which is a big change from a few years ago. One thing that's really changed in recent years is the variety of mortgage products available. Sure, you got your traditional 30-year fixed rate mortgage, which is still the most popular option, but there are also adjustable rate mortgages that might make sense if you're planning to move in a few years, or if you want to take advantage of potentially lower initial rates. For first-time buyers, there are still some excellent programs available. FHA loans only require 3.5% down and are more forgiving on credit scores. VA loans are fantastic if you're a veteran or active military with no down payment required. USDA loans work great for rural properties, which we see a lot of here in the tri-state region. These programs can be the advantage that gets you into home ownership sooner than you thought possible. Then there are the newer options that have gained popularity. Some lenders now offer bank statement loans for self-employed borrowers who might not have traditional W-2 income. There are also asset-based loans for people with significant investments but irregular income. The key is working with someone who understands all these options and can match you with the right program. Processing times have gotten much better too. Most conventional loans close in about 30 days, sometimes faster if everything goes smoothly. Government-backed loans like FHA or VA might take a bit longer, maybe 35 to 45 days, but that's still much better than it used to be. During this whole process, communication is absolutely critical. Your lender will ask for additional documents, sometimes multiple times. They might need updated pay stubs or bank statements. They might want a letter explaining a large deposit in your account. The key is responding quickly and completely. Any delays on your end can push back your closing date. This is where having an experienced agent becomes invaluable. I stay in constant contact with your lender throughout the process. If issues come up, I can help coordinate solutions quickly. If the appraisal comes in low, I know comparable sales in the area that might support a higher value. If there are title issues, I've got relationships with attorneys and title companies who can resolve them efficiently. Let's talk about closing for a minute because that's the finish line everyone's excited about. About a week before closing, you'll get your closing disclosure, which shows exactly what you're paying and what your monthly payment will be. This is your chance to review everything and make sure it matches what you expected. At closing, you'll sign a lot of documents. I mean, a lot. The mortgage note, the deed of trust, the closing disclosure, insurance documents, the list goes on. But don't worry, the closing agent will explain each one. You'll also do a final walkthrough of the property to make sure everything is in the condition you agreed to. One thing that's become more common is digital closings. Some lenders now offer remote online notarization, which means you can sign documents electronically. It's convenient, especially if you're relocating from out of state, but not all lenders offer it yet. The mortgage industry has also gotten more transparent about costs. The new loan estimate and closing disclosure forms make it much easier to understand what you're paying for, but you still want to review everything carefully because mistakes happen. Interest rates are, well, they're always changing, aren't they? But the good news is that even if rates go up after you get pre-approved, most lenders will honor your rate lock for 60 to 90 days. Some will even extend it if there are delays that aren't your fault. Here's something else that's evolved: mortgage servicing. The company that originates your loan might not be the one that services it. Your payment might go to a different company entirely. This is totally normal and doesn't affect your loan terms, but it's good to know. One last thing I want to mention is refinancing. Even after you close on your mortgage, that doesn't mean you're stuck with those terms forever. If rates drop significantly, or if your financial situation improves, refinancing might make sense. Just remember that refinancing essentially means going through the mortgage process again with new closing costs. The bottom line is that getting a mortgage is more streamlined than ever, but it's still a complex process with a lot of moving parts. Having an experienced professional on your team, someone who understands not just the process but your local market, makes all the difference. Whether you're buying your first home or your fifth, knowledge and experience provide the advantage that can save you time, money, and stress. That's the mortgage process from start to finish. It might seem overwhelming when you break it down like this, but remember, thousands of people successfully navigate this process every month. With the right preparation and the right team, you'll be holding those keys before you know it. Contact me at www.brodynash.com or 304-208-6190 to learn more. Thanks for listening.